Welcome, everyone, to episode 6 of Being Deskless with Anthill, where we share bite-sized advice for companies with deskless employees. I am the world's most unlikely host, Jennifer Harris-Kroll. I'm very excited about today's guest. He's the founder and CEO of COVERR, a company that offers loans for contract and gig workers. Welcome to the show, Kobina Ansah. Yay! Hi.
Hey, good afternoon, Jennifer. It's a pleasure to be with you today.
I'm so happy that we have this opportunity to expand on our previous conversation. To begin with, please tell the viewers about COVERR in your own words.
Sure. So COVERR's mission is to provide financial services customized for gig economy workers like Uber drivers and DoorDash delivery personnel to get them cash to take care of their short-term financing needs or small-term emergencies that they might have, such as the busting of a tire in the case of an Uber driver. So we use alternative metrics to identify their value and provide capital on that basis.
That's awesome. And we're going to dig into all of that in just a couple more questions. So I want to tell everyone, though, you had a really successful career before you even started COVERR. So let's spend a couple minutes talking about how COVERR came about.
Sure. So I guess to quickly touch on my background and then the, genesis of COVERR. My background has always been in finance, initially starting with Ernst & Young in their transaction services business, and then moving over to Wells Fargo, working in their specialty lending practice, where I underwrote over $1 billion during my tenure. But something that I always wanted to do was serve kind of a more diverse population that kind of represented individuals who looked a little bit more like myself. And so went to business school with the ambition of starting a company and learning about entrepreneurship and how to pursue that. And so my first venture after business school provided credit cards to international citizens without US credit history. And after that, I started to work on the early parts of COVERR. And so what we found was that in the city of New York, many people don't know, drivers pay as much as $300 to $500 a week just to rent a car that they'll never actually own. And we thought that was pretty ridiculous because in the course of 2 years, they could spend 2 times the amount of the actual MSRP of the vehicle. So we thought maybe we could provide specialized financing so they could actually own a car at the end of the day. We started to do that. We deployed as much as $20,000 for each vehicle. But what we found was that the $500 down payment that we required for them to get this, many of them couldn't pay. And that's where we identified maybe cash flow was a bigger issue. And that was kind of the start of COVERR. We started providing cash flow financing and started with Uber drivers, and then found this was a pain point that was seen much wider across the gig economy space.
What made you passionate about this population in the first place?
I would say it was honestly by mistake. Didn't realize that this was an issue. Didn't even know anything about the gig economy. But I think it was seeing the passion of these workers and how much time they put into their work, and seeing the desperation that they had in terms of the limited options that compelled me to want to see, is this a pain point that I can use my past skill set to address.
So let's back up just a little bit, and can we explain to the audience what the gig economy actually is and how it relates to the general deskless workforce?
Yeah, certainly. So first, I guess talking really about the gig economy, I think the gig economy has been around for a very long time. It's just a more new kind of hip, sexy terminology for independent contractors who really are 1099 workers who been around for a very long time. And interestingly, thinking about the deskless workforce, many reading the Wall Street Journal or TechCrunch might think a majority of people work behind computers at desks, but really 80% of the global workforce, representing 2.7 billion workers, actually happen to represent this deskless workforce, working in areas such as agriculture, hospitality, retail, manufacturing, and a big part of that being in transportation. So the gig economy that we serve are individuals who work as sole proprietors or independent contractors, oftentimes working for platforms that people may know, such as DoorDash, Lyft, Uber, and the like. And so it's just a small segment of this massive and very important deskless workforce that Anthill serves.
Well, thank you for that. Yeah, and I think that people really don't understand the issues that they face. So let's talk about that for a minute. Like, what kind of issues do gig workers face that make them appear more risky to conventional institutions? And I know even for myself as a business owner in the past, it's not as easy as people think of just going into the bank and getting a loan for something.
Yeah, so I guess to kind of speak first about kind of how they don't maybe meet traditional underwriting criteria, and I can shift more to just general difficulties that these operators face. So, with specifically within the capital provision space, uh, gig workers often don't meet the underwriting criteria used for consumer or business finance. So, on consumers, typically you're looking for like a W-2, so your pay slip, which is generally consistent when you're working at a kind of standardized institution, which a gig worker doesn't really have, and maybe a credit score. On the other side, in terms of a typical business, which you might have known as a small business owner, they're looking for multiple years of audited financials. They're looking for at least 2 years of operating history. And so if you find yourselves between both of these, there's not really a clear option for you. And so really, you're left to maybe kind of predatory financing solutions or relying on friends and family. And in some cases, we just found our clients would, as they say, weather the storm themselves and deal with the consequences as they came, whether that mean repossession of their vehicles, damaging of their personal credits, and others. And so it can be very difficult there. And then stepping back further, just looking at that kind of quality of life as a gig worker, the benefit is you get to choose when you want to work. The difficulty is you have to match that with a demand for the service. So you really never know how many rides are going to be demanded from you that day, meaning you don't know how much you're going to earn. And that can really impact you when you have fixed costs, such as maybe a car payment or your house payment, or you need to take care of your family. And there are not a lot of resources, financial safety nets or the like that these individuals have. And then, you can go into things like personal health. Healthcare is not provided by gig platforms. And so these are things that these people have to manage themselves. And trying to get a health plan as a single entity can be very costly, further making the quality of life difficult for this segment.
I think what's always interesting to me too, when you talk to people who aren't kind of in the business of working with this kind of workforce, that they always assume that these roles are like an afterthought, or, oh, they're just doing this because they have to. When I meet a ton of people who they might they might contract out for multiple things, but this is their choice, whether it's because of childcare, they swap shifts with a partner to take care of little ones, or they have parents they're taking care of, or they just like that kind of work. They're in school. Like, there are all these different options that, like, this is the best option and choice for them at the time, and they take it very seriously. So it's always upsetting to me when people are like, oh, well, they just didn't, get a real job or whatever. And I find that insulting.
Yeah, very much. Well, I mean, I would say, funny enough, I know some drivers within our portfolio who make more than some of my friends in investment banking. And that's because they are dedicated to what they do. They strategize around the plans and what times when they drive and who they're serving and whether they're doing black car service and others. So in many cases, it's deliberate. I would also say that the population, at least that we serve, happens to be very culturally diverse. And so for those who are coming to the country for the first time, maybe have limited language skills when thinking about speaking English, this is a great way for them to enter the market. And so I think the average Uber driver, I think there's a stat out there that many of them are, maybe have an associate's or above. So yeah, to think that they are, doing it because they are not skilled is it's very misleading.
Yeah, definitely. So I want two questions in one, I guess. What do people typically use this for, and what does the process look like for the borrower?
Sure. So maybe I will go the reverse way. So
Okay, that's
for the the way that a client comes to the site is they go to our website at getcover.com. They go through a simple 5-minute application where they provide information about themselves as well as connect to their primary business bank account. Within 24 hours, we provide a determination whether we can provide them with capital or not. And then 24 hours or really one business day within that, they receive the funds in their primary bank account. Then each business day until their contract is completed, they take we take a small piece of their daily earnings to repay that contract plus our service fee. In terms of use of funds, I would say it really ranges. It ranges from, in a time like now where inflation is high and gas is not cheap, a lot of people will use that to provide them with a bit of liquidity to take care of that. Some people use it to take care of maintenance. Some, unfortunately, from time to time, drivers get into car accidents and they need capital there. Some, even just talking a moment ago about healthcare, use it to pay for medical expenses such as dental expenses. So, it's really their money. Once we give it to them, they can use it on whatever they deem necessary to support their business endeavors. And as a independent contractor, that can be winding from the coffee that keeps you alert at the wheel to, childcare maybe you need to have so that you can work on the road to support your family.
That's great. So even during the application process, they don't have to say like it's for this specific reason. That's not part of the judging criteria.
No, all we require though is that they understand that it should be used towards business related expenses. So they shouldn't go to Miami. However, it's not our job unless there's a conference, but it's not our job to manage how they spend their money. They are adults.
Yeah, that's awesome. And so a little more detail about what's the difference between a traditional loan and a cover advance.
Sure. So a traditional loan typically looks at factors such as your credit score. It looks at things like maybe your debt to equity ratios. It looks at some other, usually for loans, kind of traditional work factors like that, like a W-2, as I said, for consumer finance. On the cover side, the way we operate is we do not look at credit history. We allow each client to come into the platform with a clean slate and build a relationship with us. We provide capital based on their earnings, their business earnings. And so we look at what their historical performance has been, and then we advance a small portion of how much we forecast they will earn over a particular period, and then again take payments each business day. Another, I would say, big differentiator between us and a traditional loan is the fact that we are built to adapt to the ebbs and flows of these businesses. So in the event, as I said before, if somebody got into a car accident, for example, a normal loan will likely continue to accrue interest. At best, they might do a forbearance, but still additional expense would accrue. In our case, if somebody provides a verified accident, so provides the associated documentation, we actually will just pause all payments with no additional fees to the client so that they, at the end of the day, still pay the exact amount that they had agreed to pay at the beginning of the contract. So we're very relationship based.
That's amazing. You didn't tell me that in our other conversation. So that's very thoughtful. And I can imagine helpful in those instances because it's super stressful. I can imagine. I love that you don't do credit checks. And that's not a reflection on my own credit, but I do love that because I feel like it seems like to me that credit scores aren't really reflective of the actual risk of that individual, partly because things stay on for so long, or, there's all kinds of reasons why. I dare say it's a little maybe outdated of a mode. So I appreciate that. What made you say, let's take this out of the process?
So I will say that I think that there is still value that comes from a credit score, and that's why, you know, these larger institutions issue, you know, millions, if not billions of dollars on it. However, I don't think it necessarily accurately represents the risk profiles of some participants in this demographic, because one thing that many, including myself, have not had when growing up in kind of the financial environment is how to manage your credit properly. How
Yeah.
does the credit score even work? And the difficulty when providing auto loans for some of these drivers, what we found is they had a really low credit score. But when you looked into it, the reason why is because they were given a credit card that had maybe a $300 credit line, and they need to pay for some business expense that costs $250. Well, in that instance, the utilization is now over 75%, and
Yeah.
it drops that score down. So it's not really that they are a bad individual. It's they didn't have, you know, sufficient capital. But, you know, when, you know, somebody who has a $50,000 credit line or beyond is like, how do you spend 75% of your, you know, your utilization? It doesn't accurately represent that risk profile. And so, you know, what I wanted to do when we were thinking about kind of our risk factors was give people the opportunity to prove themselves. And so we do a lot of unique structures in our contract to allow people to get that clean slate to really prove out their worthiness. And also we size it to how much they earn. So if you happen to be a driver who makes $500 a month versus a driver who makes $10,000 a month, your offerings will be significantly different because we adjust it to your earnings.
I think that's amazing and great. I love how you've structured that. Yeah. So touching on something else you mentioned, you talked about frequent micropayments, like that you guys, they make a payment every business day. So dive into that a little deeper. And also, do you think micropayments are a growing trend?
Certainly. So for this demographic, given that it you know, earnings can be highly volatile, meaning your earnings are changing day to day. This allows us to be more in tune with the changes that our operators are going through, and we can more rapidly identify if there's a change in profile and see if there's a way for us to intervene and you know, add value and help. It also lowers our risk so that we're not, you know, a month later realizing, hey, this person hasn't worked for a month, and now we are in a difficult position. In terms of like more macro trends, I would say that this seems to be a trend that is increasing. Looking at companies like Affirm, Afterpay, and others in a new, well, I shouldn't say a new industry, but again, it's like a rebranded industry of buy now, pay later, or BNPL. It's giving people options to buy things when they leave an e-commerce store, maybe buying a shirt, and instead of having to pay $50 immediately, they get to pay $10 a week over the course of 5 weeks to pay it off. And it's just breaking it into more bite-sized, easier to manage, you know, I guess in an easier to manage way. And so I think it is a trend that is certainly picked up. You know, there are literally billion-dollar valued companies that are doing that. So I do think it is a trend that is looks like it's picking up.
Well, I'm going to give away my age here, but when I was growing up, we called that layaway. You could go to the Kmart and get all your school clothes picked out and then just pay for them a little every week until school started. And that
Exactly.
So it's funny how everything comes back around, but it's branded differently, right?
It comes back around. It just, you know, it's all about framing, right? You know, they didn't want to call it, you know, layaway. Now they're calling it BNPL. You know, it's sexy, but
There you go.
it's the exact same thing. Yeah.
Yeah, hey, I'm surprised that actually went away for a while because I don't think I knew anybody that didn't use it growing up, but what do I know? Okay, so the gig economy, it seems like it's only going to continue to grow, right? So what do you see for the future of COVERR?
You know, God's grace, we will continue to be a valued partner and get to continue to support operators as they kind of broaden their their skill sets and the businesses in which they operate in. And honestly, for COVERR, we would like to ultimately provide other complementary services to really serve them in a more holistic nature. And then also, I would say we would like to expand from just the traditional gig economy as people know it. So moving away just from transportation, but into other things such as engineering. There are a lot of people who are engineers who are independent contractors, or nurses who are independent contractors, or so many in that 2.7 billion global workforce that may also have characteristics that could benefit from a service like our own. And so that is the vision.
Yeah, absolutely. Our graphic designer is an independent contractor. So, I mean, it seems like for every profession, there's a version that decides they want to do things differently. So I love that. Okay. So is there anything else you want to cover today?
I would like to cover COVERR. No, I mean, I think we've highlighted a lot of the main things. I think one is this is a lot of people don't know that this is a valuable segment. Don't know that the deskless workforce is so significant and literally powers our day-to-day lives. And so very thankful for entities like Anthill for highlighting it, but also providing valued services to it. I think there's a lot of research out there, including some that came out from Emergence VC, talking about how to get the best performance out of your deskless workforce, you need to improve their quality of life and make sure that they are happy. And so COVERR is trying to do that from a financial perspective, providing them that ease of knowing that you have a financial safety net, and great services like Anthill are doing the same in other domains. And so that's really great. And just thankful to be a guest on your show today. So thank you for giving us an opportunity to highlight COVERR and our mission.
Well, and I want you to come back because we have other things to talk about. But you made me think that now I lost my train of thought. But when you were talking about, I lost my train of thought. Never mind. All right. And we're almost out of time anyway. So for people who want to learn more about COVERR with 2 R's, and help them or someone they know, because I mean, everyone knows somebody who is a gig worker. What's the best way to find out more about COVERR?
They can find us online at www.getcoverr.com. So just to spell it out, GetCoverr.com.
And we will also share that information in the chat for people to get in touch with you and learn more when they need to. So someday I'll remember what I was going to say, and you can come back and answer that question too.
I look forward to it. Certainly.
Okay, great. Thanks so much for your time today. Can't wait to watch you guys grow and expand, and so everyone knows who COVERR is.
Really appreciate it, and thank you for the mission that you and the Anthill team pursue. It makes the lives of others in the workforce much better. So that's great.
Awesome. Teamwork makes the dream work.
Makes the dream work.
Okay, so thanks everyone for joining us today. We're changing some things up. So to find out more about our next episode, you can learn by following us on LinkedIn, Twitter, Instagram, Facebook, or now even TikTok at Anthill Helps. And we'll see you next time.